Hello and welcome to Weekly China Recap. I'm your host, Xing Zheming. This week, we are zooming in on a meeting that may not have made flashy headlines, but carries profound implications for China's economic future. On July 1st, President Xi Jinping presided over the 6th meeting of the Central Commission for Financial and Economic Affairs, or CCFEA. This is one of China's highest-level economic policy-making bodies, and this time it focused on a topic that has long been on Beijing's reform agenda, building a national unified market. Now, what does that mean? At its core, this idea is about breaking down local protectionism, standardizing regulations and procedures across provinces, and allowing goods, services, people, capital, and data to flow more efficiently throughout the country. The official languages describes this as 5 dimensions of unification and 1 commitment to openness. It means unified market rules, unified infrastructure, unified government conduct, unified law enforcement and oversight, unified allocation of key resources, and continued opening up to both domestic and foreign players. That's a lot of jargon, but the message is clear. Beijing is not just tweaking around the edges. It's trying to lay down the next layer of its economic foundation, one that is integrated, rule-based, and future-proof. And why now? Because internal inefficiencies and fragmented markets have become a major drag on growth. The over-competition, what's called 内卷, among companies and local governments, has created a race to the bottom. Everyone's trying to offer lower prices, more incentives, and looser regulations to win business. But that's hurting long-term productivity, investment, and innovation. And this isn't new. In fact, we've seen both the State Council in 2022 and the National Development and Reform Commission earlier this year issuing detailed guidance to address these very problems. But implementation has been patchy. Local interests often get in the way of national priorities. This is why this latest CCFEA meeting matters. It sends a top-down signal that the political narrative is shifting again, from high-speed growth at any cost to high-quality growth under unified governance. The language of the meeting was unusually direct. It called out price walls and low-end competition, local governments bending the rules to attract investment, lack of transparency in public tenders, and excessive red tape holding back private businesses. It also stressed fairness in law enforcement and proposed new mechanisms for auditing how local officials perform, not just on GDP growth, but on whether they follow national rules and support a level playing field. This is a significant recalibration of China's growth model, especially amid rising geopolitical risks and the need to boost domestic demand. If successful, it would allow Beijing to better mobilize its enormous internal market and foster real innovation without falling into the trap of overcapacity and inefficiency. And let's not forget external dimension. A unified, transparent domestic market is not just about internal coordination. It's also about attracting foreign investment and reducing friction in global trade. In an age of decoupling and reshuffling supply chains, China wants to position itself as an integrated and predictable economic player. Of course, implementation will be key. Local governments are used to running their own playbooks, but with a clear top-down messaging, detailed frameworks like the guiding principles for unified market construction, and tighter performance evaluations for officials, the incentives are starting to shift. In short, China is trying to move from a patchwork of local economies into a truly unified national marketplace. The political will is there. The question now is, can it overcome vested interest and inertia? That's it for this week's recap. I'm Xing Zheming. Thank you for tuning in. As always, If you have any questions, feedback, or topics you'd like us to cover, feel free to reach out. Until next time, stay informed and stay engaged. Goodbye.